Bitcoin 2022 is came out of nowhere and has become the de facto global gathering of Bitcoin, the granddaddy digital asset. This year, it's going to run for 3 days. It's taken over the entire convention center in Miami where I live. It's a big facility. But what's remarkable, the first day, the 6th, it's all institutions and it's totally sold out. That has never happened before. That'll be 1,500 to 2,000 institutions from all around the world there to listen to different thoughts about where we're going with this thing. I'll be doing a keynote exactly on this ESG issue because it's top of the mind for everybody. I'm going to lay out the data I've got and we'll have that discussion, but it's institutions only. That is remarkable. I think it's impossible to predict price or volatility. And obviously, the trend is your friend as far as Bitcoin's concerned. I think what affects price near term and midterm more than anything else is to get policy out of the US regulator on Bitcoin and stablecoins. The two that, if you read the Loomis bill, are really focus on Ethereum, Bitcoin, and stablecoins. And so that's interesting because the fact is, today, and I work in the indexing market where we try and index for institutions. I'll give you an example. If you're a sovereign wealth fund in the Middle East and you want exposure, some of these countries generate $250 million of cash a day, and they want obviously to get diversification. They already have oil, so they want the S&P 500 X energy. And 2 years ago, they started saying, well, we're not allowed to own Bitcoin, but how do we get exposure to Bitcoin volatility? And at that time, the way that was really working was many companies had raised capital in the US markets that were Bitcoin miners, pure miners. They are awarded coins, they kept them on their balance sheet. And the theory was that if you owned the equities, you could get exposure in a legitimate way to the volatility. And indeed, if you look at the price of Bitcoin vis-a-vis, let's call an index of some of the popular ones, that would be Hut 8, Marathon, Riot, and Hive, which were very popular to be indexed, they really traded in tandem with Bitcoin. So it worked for a while. But that's why I talked about the four vectors. That correlation is going to fall off pretty quickly now that we have, for the first time, calls for carbon audits. You can't say that it's a zero, as Roy pointed out. His scenario, when he talks about these extreme prices, is hyperinflation, 15, 20, 25%. I don't know if that's going to happen, but I'm on board with him on the trend as your friend on pricing. I think the reason we own so much Bitcoin and Ethereum right now and 32 other positions is I believe this sector will be the 12th sector of the S&P, as you pointed out earlier. And I believe that you want diversification. When I own a sector like energy in the S&P, I have no position more than 5%. Well, I have 32 positions on. And my view is simply that Bitcoin is not a coin, it's software. Ethereum's software, Polygon software, Solana is software. All of this stuff is software. So I'm just investing in software development that has the potential to provide productivity, and the market will value it based on its scarcity in the case of Bitcoin, or the proposal of economic increase, like a Polygon reducing fees and friction, and HBAR being used by Boeing for supply chain management. All of these different scenarios. I don't know which one's going to work, but I don't need them all to work. I just need a few to work, and I'm going to make a ton of money. That's the way I look at it. I see it as the number one destination for institutions that are allowed to index it when they can index it. They would be picking up 1% to 3% weighting if they could. They tried to do it, as I mentioned earlier, using equities that mine Bitcoin. And that's in a bit of turmoil because of ESG mandates. But Bitcoin itself will provide enough liquidity for an institution. And I would add this, regardless of what you think your target price is, if it does become an indexed asset, and I think once the SEC mandates it, it will, the volatility will decline dramatically, because what happens in an indexing model is when prices decline and your weighting is 1.5 basis points or 150 bips, you simply buy up to your 150 bip maximum. And when prices exceed that, then you trim back. But that provides tremendous stability for any asset. So you find that stocks that get indexed, or assets that get indexed, all of a sudden prices go up and stability becomes part of what their story is for a very long period of time. Now, I'll add that the Canadian regulator, specifically the OSC, in the last 2 years has been extremely enlightened What I believe, and this is a personal opinion, and I've said this before, but I believe that all the regulators talk to each other practically every day. But there's a special relationship between the OSC and the SEC because they regulate markets that are so similar in nature. And so I believe that whatever is going on in Ontario has already been quasi-approved by the brethren at the SEC, and they're using Ontario and the Canadian provinces as guinea pig states to try these ideas out. And what ideas are those? The first ETF with the underlying asset, real Bitcoin. The first ETF with the underlying asset, Ethereum. The very first global crypto exchange attached to a dealer broker license, both sides regulated.
Can we safely say that the US outright banning Bitcoin and other cryptos is no longer an existential threat?
Yes, we can. There's no chance that we're going to be banning Bitcoin or anything else that holds economic promise in terms of developing new technologies for financial services and payment systems. That's always been the hallmark of American entrepreneurship. We're not going to ban that. Most of the engineers today that are working on these projects see tremendous potential, transparency, audit, everything. They provide so much upside that they'll remain going. But the one thing that's 100% sure is they're going to be regulated, 100%. But I'd argue that's good news. We get this regulation in place, the institutions will pour in trillions of dollars. Those that have been speculators like Roy and I will benefit from the fact that these will get indexed, and that will be a great upside. And then what happens after that is based on market demand, based on indexing. The majority of the ownership will shift to the institution. The majority of the S&P is owned by institutions. People think retail owns stocks. No, they don't. You know, it's like Facebook. The reason it got crushed was that it got re-indexed from 5% down to 2.5%. And it took 4 weeks to flush all that out because of the new perceived risk on the metaverse and everything else. That is not a retail stock. That is an institutional stock. It was one of the FANGs, still is, but it's all institution. And that's the upside and the potential of Bitcoin. So the reason we're not going to be in a crypto winter again is that the last crypto winter had no possibility of policy or regulation. That is not the case today. There's enough believers that this regulation will be a good thing, watching these bills go through. It's very rare to see a bipartisan bill in today's Congress, but you have one here, which means both sides understand the merits of cryptocurrencies. And so you have a Ted Cruz, sitting right beside a Democrat, which never happens. And so I look at it and say to myself, that's one of the reasons there's an underlying bid on Bitcoin and other cryptocurrencies, because there's an assumption in the next 2 years something will happen that did not exist in the last winter.